Is it a time to play defense? Let's ask Scott Chronert. He's a U.S. equity strategist at Citi. $1 trillion question. Scott, what are you doing?
Hey, Kelly. Well, I think we have to respect that we're getting hit with a number of these issues, whether it be the Japanese bond market, read through to U.S. Treasuries, or whether it be the European situation, courtesy of Greenland, that are sparking about a volatility right now. I mean, our preference is to let this play out a little bit longer, but ultimately we think we're going to get a buying opportunity in here. I would say that in our view, we continue to use the fundamental setup for U.S. equities as our guiding light. And at this point, we don't see any reason to back off of a fairly constructive view, although we are going to have to continue to monitor and navigate a lot of these growing macro influences.
I know you heard the top of the show, Scott. Obviously, you're the U.S. equity strategist. We're talking about Greenland. We're talking about Japan. What are you and your team focused on right now? Earnings?
Well, we're focused on earnings. We're just getting going on the Q4 reporting period. Our whole argument in supporting a 7,700 target for the S&P has been a high in the street estimate for index level earnings at 320. So I need to continue to see a beat and raise dynamic. And I will say, though, going into this year, part of our view had been a lower 10-year yields, which is the house view to end the year sub 4%. And we'd had expected that a lot of the policy distractions of last year would be lessened. Well, 2 weeks into this year, I would say that we're probably navigating a couple of issues that weren't expected to start the year, but we still have 11 months to go. I think there's a lot to play out here that I think will end up being quite constructive for U.S. equities.
Yeah, that said, what do you make of the kind of larger backdrop, right? Why do people keep selling treasuries at moments like this?
Well, you know, the Japanese have been a source of demand for U.S. Treasuries for some time. The yield differentials have always come into play. So when you back up Japanese bonds as they have, then you begin to change that yield differential math. I think we just have to be sensitive to this, that there's still a lot of pieces at work to this puzzle, particularly as we look at what's happening in Japan, but also in the context of a lot of the policy initiatives and inertia that we're seeing right now, potentially what that does to our deficit math. So we've got our eye on the bond market vigilante thing as well. I think it's a little bit premature to draw strong conclusions, but I think the news flow over the past week or two has a lot of us on edge in terms of where some of the specific dynamics are going to take us. Yes, Japan, but also looking at the European relationships.
A lot of your clients, you've been right on this small cap, mid cap pivot that we have seen the last few months. They finally look like they got something going. Now we've got higher yields. Higher yields are seen as kind of the kneecapper of smaller and mid cap stocks. Are they? And do you have to change your views if the 10-year yield keeps going up?
Well, if it goes up materially from here, we have to rethink, Brian. But what I would say on this, though, is that, you know, part of the narrative in terms of small caps, yes, has been soft landing and an ongoing accommodative Fed, which hasn't changed at this point in terms of that narrative. But we've also been of this view that you're looking at a setup here over the next several months where various forms of fiscal stimulus are going to come into play and be a tailwind to that economic sensitive part of U.S. equities, which really is part of the U.S. SMID play. So we're not backing off on this. I think it's actually very early innings in terms of what we think should be a fundamental pivot in some of the growth expectations as you go down the market cap spectrum.
All right. And then I guess the only kind of remaining question is whether you think any of this leads to, I mean, even in the defense space, any other kinds of rotations, or you just literally just say, you know what, it's going to blow over. It's a tempest in a teapot.
I just think, you know, and this is a lesson learned from last year, and you have to be a little bit careful on how quickly and to what degree you anticipate and model in a lot of the policy discussions going on. And I think, you know, a storyline from last year is that, yeah, they can get fairly scary at times. Ultimately, the playthrough is a little bit less onerous from a fundamental perspective than one might have thought. So again, to make a notable change in terms of a view towards U.S. equities with what we've seen so far, 2 weeks into the year, a bit premature. We have to let this play out a little bit longer, Kelly.